Good morning, everybody. Hello, hello, hello. Happy Friday. End of the week here, March 3rd, of course. And we made it. We made it through the home stretch. And it's time to get ready to enjoy a weekend. I don't know about you. I had a pretty long week. Um, I'm also just realizing, is there doubled audio? Can someone just answer the question whether or not there's doubled audio? I'm seeing two microphone input audio. Okay, there is doubled audio. All right, let me try to do this. Get rid of this guy. Okay. All right, how's that? Is it still too loud? It's probably still too loud, I would think. Still too loud? Better? Better. All right, I'm still going to bring down the... To me, it seems like it might be a little loud. Bringing it down just a little bit. Okay. All right, that should be better. Yeah, I saw two doubled audio inputs. After what happened yesterday, I'm like, oh my goodness, what? Not again. Cool. All right, all good. Moving forward here. So it's Friday. It's March 3rd. Friday rules are in play. So let's get that out of the way early on in the stream. We know that we've got Friday rules. We are not doing anything crazy today. If you are green on the week, stay green on the week. If you are red on the week, no swinging for the fences. No swinging for the fences, okay? So don't go full portfolio on zero DTEs. This used to be much more relevant. It's not unfortunate, but it used to be much more relevant to say like, hey, let's not go crazy with zero DTEs on a Friday when Friday was the only day that had zero DTEs. But now it's not the case anymore. You can trade zero DTEs any day of the week. So anyways, I would still say the same thing. Don't go into the weekend with feelings of animosity for our market. And we'll just take a look here. Of course, at 10 a.m., you can see we are getting services PMI. Let's bring out this one. So there it is. And that is on the heels of a fairly cool manufacturing PMI. Remember that services has much more to do with the sticky portion of inflation. So keep a close eye on what happens at 10 o'clock. Remember that this... really, a number above 50, so this is measured in terms of less than or above 50. Number above 50 represents some sort of expansion, and underneath 50 is a bit of contraction, right? So services need to kind of slow down a little bit if the services part of inflation is going to come down. So we'll see. We shall see. Just be prepared for a little volatility at 10 o'clock. Let's have a look at our headlines this morning. Some stuff going on about Bitcoin Ether sliding Friday as investors weigh potential fallout from the Silvergate woes. You can see that's right here. Coinbase, others abandoned Silvergate Bank and warns about its viability. So I don't know how, I'm actually curious because I don't want to speak out of turn. How significantly lower is like Bitcoin, for example? It's still above the breakout point. So sure, it's sliding a little bit. It's a little bit lower. If we go to a daily chart, I'm sure it doesn't look great. Yeah, I mean, this isn't fantastic, but at the end of the day, as long as we're above this yellow line, as long as we're above 21.5, really the impressive move in Bitcoin is holding, right? That is holding, which is noteworthy. That is certainly noteworthy. Above that breakdown candle high here, you just get the sense that it's not really the end of the world. So anyways, that's Bitcoin. Quick check in there based on that headline. And continuing through the headlines, what else do we see? Let's grab our other colored tool. Good to go. All right, so upgrade to First Solar says that Inflation Reduction Act credits can boost the stock by more than 25%. So solar is probably doing well this morning. Biggest movers pre-market, earnings candidates from the other day. What else do we see here? Stock specific stuff. Stock specifics. This is it. This is kind of cool. It's a cool photo. The winter storms in California. It's probably not cool because they don't have the infrastructure to deal with snow. But yeah, state of emergency in 13 counties. Certainly no infrastructure to deal with that snow. But it looks this picture is kind of cool. Anyways, Wells Fargo gives an upgrade to UPS. So remember, we also saw a shipping headline from the international conglomerate. I can't remember if it was yesterday or the day before. Was it from a Chinese shipping company that handles a lot of shipments, something like that? They were like, hey, we're actually not seeing any signs of recession. But anyways, an upgrade from Wells Fargo on UPS. So shipping seems to be doing just fine. Nordstrom earnings top expectations. What else? American workers are not returning to the office like their international counterparts. We can work from home. I suppose. Tesla's plan to slash silicon carbide, you send some chip maker shares down. Interesting. So I don't know what they're going to replace it with, but that'd be interesting to follow along. Costco's quarterly results show why we're long-term investors despite softer sales, so I would imagine that they reported decent numbers there. Oof. Ericsson, ouch. Bribery. Stock probably not doing so well based on that. But it's over, right? So the lawsuit's over. The knowns are known, the unknowns are now known, and it is what it is. Upgrade to Procter & Gamble. That is, of course, consumer staples space. Yeah. So more upgrades, more positive news than negative news out there this morning. Nothing really strikes me as being overly bearish. Even this Bitcoin headline here is, it's not that bad from a structural perspective. But anyways, we are not here to trade Bitcoin. We are here to take a look at the ES futures. We'll just quickly point out that after the close yesterday, Costco was the important one. C3AI was worth watching with some popcorn. Marvel, Zscaler was reported as a pre-market mover, and Broadcom, AVGO, just an old giant, so to speak, worth watching. So knowing that, let's go back on over to the Thinkorswim platform and have a look at, since we're on this chart, we may as well have a look at a few earnings candidates here, just so I know what I'm talking about, to briefly reference them. Costco, how'd we do? Big move in the downward direction, but recovering slightly into the open here. Still underneath prior day's low. Small gap down, nothing crazy. And then I believe AI is just the ticker for C3AI. Yep. Big move higher. That should have, no surprises with that one. I should have expected that considering all the headlines about AI and all the hubbub around it. So, it is what it is. I'm not planning on trading this. If you plan on trading this, that's fine. If you want to get involved in AI, you know where to do it responsibly. We've had this talk before. It's over yonder with Softy. All right. Those are the big earnings candidates. I thought ZS was also marked as a pre-market mover. Yeah, big gap down here in Zscaler. Let's get rid of those drawings. But anyways, big move lower, opening around 119s. 119s puts us here, 50 SMA on the daily time frame chart. Overall downtrend continues. Still a possibility for a higher low there, but breaking this flag consolidation does not strike me as the most bullish thing, right? We're opening here underneath. So anyways, that is what we've got for the earnings movers. What else? Marvel, MRVL, chipmaker, worth paying attention to just because it's chipmaker stock, probably has some minor impact on something like AMD. Gapping down here, 4150 on the open, 4150. Again, another move into the daily 50 SMA. Breaking down from this consolidation does not strike me as the most healthy look, but still, you could continue to argue weekly high or low can be found, right? So that's the main deal. We're still dealing with that volatility of weekly time frame trying to be in an uptrend, daily time frame trying to flip into a downtrend, right? That's what's really causing this down here, breakdown of balance, rally because we're trying to find the higher low weekly. That to me continues to be the tensions in the market. And let's discuss it on none other than our ES on the higher time frames and then moving lower. 4 hours up first, and we will say hello to everybody in the chat. All right, so just going to leave the ES on this look right here. Obviously, we are in a downtrend. We are experiencing a counter trend rally right now. But we'll talk about that in just a moment. Who's here? Who's kicking us off strong in the chat? Scrolling all the way up to the top, we've got Sharath. Thank you for starting us off with a good morning. After that, we've got Nick Farrell, Robert, Pete and Repeat, Ketchup Kings, Team 21. We've got Roger Tutt, INF the Based Homie, of course. I'm feeling great, feeling much better today. Real excited for the Friday, to be quite frank with you. Long week, and it's wrapping up, right? Jonathan, Trading Vibes, Davey Day Trader, New to Stock, DP, Mudaman, May. We've got Cipriano, Justin Storm, Hunter is in the building, Steve Valois, David, Chris Carras, M. Spears, Cy, Jay Cortina, John Cardozo, Gallo P, James T. We've got Ronald, Inza, K. DeLeon, of course. Just going to look for some green names here now. It's quite a few people in the chat today. All right, so hopefully we're not going to miss anyone. Arthur. We've got Jay Hicks. We've got, who else? John Wilkening, nice to see you. Taking profits, taking underscore profits. That's different from Trading Vibes, of course. Gregory Rulo, KOS Funded Trader. Stevie J, different from Steve Valois, of course. We've got Miami Beach Broker in the building. Siege, Thule, Black Diamond Off the Grid, Earth Creature, always honorable shout outs there. Victor Y, Turing Trading, Bert, who else? Killer Herb, Infornity, Jay with Gold Cashback, Brian Scott, Ivan Lobus, Audi 8, and that's it. All right, cool. Good morning. Thank you all for tuning in. Let's get started. ES 4-hour time frame chart structure. What's going on here? We know that we're in a downtrend. That should not come as a surprise. We know also that we threatened the other day, a more meaningful breakdown of these lows, but what happened? We rallied, we closed the gap, and actually went, just moved straight in the upward direction. Kind of incredible stuff. So the market continues to do some pretty illogical things, if you ask me, just because, I guess from this perspective, we just made a lower low. We can look for a lower high rebound, right? But we were kind of limiting our idea of the lower high to being underneath the two lows from here and here on the prior day's session, right? We were opening underneath on a big gap down. We were looking for a gap fill reversal. That would have been, again, remember, if the market gives us what we want, which it rarely does, that would have been the number one situation to look for a short. So the market filled the gap, but it just didn't really do anything impressive in the downward direction. Obviously, we rallied into this as a balance area, which is much more clear to look at on the hourly time frame chart. So we'll do that now, right? So here's the hourly time frame chart. This is the balance area I was just discussing. This we know, right, was support, resistance, support, resistance there, right? This seemingly should have been the more meaningful breakdown of the ES, right? Especially as we gapped down on the prior day session. So thinking in terms of logical steps, it would have been most logical to close the gap, reverse off of it, and then continue the trend, continue the breakdown of this overall balance here. Simply wasn't the case. Right? So anyways, with all of that, we've got a big rally into the close, and we're back inside of the hourly balance. So it's pretty hard to be, a short. It's hard to be someone looking for a massive breakdown in the market. The only time that the sellers have been making progress really was the Tuesday session of last week up here, right? And then also via gaps in the market, right? This sell did not really stick. It rebounded on last Thursday. Friday, we opened on a gap down, and it was really, there was no short intraday as a scalper. There was no intraday short there. Monday, a little bit of downward pressure, but still in the balance. Remember, that wasn't so clear. We were gapping over Friday. Gap rules were in play, but we were looking for a rebound to stay in the balance, so shorts didn't do anything impressive there. Tuesday was choppy, and then a little slide into the close. Then we move underneath the balance, right? Remember these lower wicks? If you're watching Wednesday intraday, it was kind of brutal. Just kept getting bought up off the lows every single time. There was no follow through underneath the lows. I guess what I'm expressing is that the shorts intraday, the shorts are not doing much from a meaningful perspective, right? It's like gaps are faded, and intraday, there's very little follow through from the moves. So because of that, I don't know that today we just want to magically flip to being long and looking for this market to break out. I think we still have to resolve this balance area here on the hourly time frame chart. And my comment would be, we're opening in the midpoint of this range. We always know that there's a lack of edge in the midpoint of a balance range. But, I suppose what I'm getting at the end of the day, the essence of the morning stream here, the tension in the market, is that the 4-hour trend has flipped down. We know that the daily trend as well has flipped down. And I've been beating this dead horse for quite a while because I really do think it's an important concept to understand, which is why the market is not really cooperating in a manner that's easy to trade, right? We know that all these time frames did flip into downtrends, right? 1 hour as well in a downtrend. But the weekly chart, if you take a look at the weekly chart, it's still trying to hold on. It's holding on. And look at the type of candle that we're printing. You tell me. If this is a 5-minute chart, are you thinking long or are you thinking short after you see a candle like this? I don't know. To me, I'm thinking long, right? I know that we're in an overall new uptrend. We've got lows, higher lows, trying to build out a higher low. We've got ourselves a hammer candle. The sellers are kind of not doing much at the lows here, right? There's no follow through in the downward direction. We're not closing weak on the lows, at least as of right now. We've got highs, we've got higher highs. So the weekly chart is really what's causing this push, pull, right? Yeah. And then I think Davey Day Trader brings up a great point as well, there's just a ton of interest and as you put it, I think this is just a great way to put it. There's a lot of saturation at 4,000, right? So this area of the market is not it's just not willing to give it up so fast. And especially with the weak sentiment from the sellers, here's the internal screen. I mean, look, we had some minor outflows. Minor. I would just remind you, so folks who are not familiar with this study, this wants to get, if you're going to see significant outflows from the market, you want to see this at sub 600, right? 600 in either direction, net, absolute value, sub 600, right? And it just wasn't the case. Look at where we're at. We're at neutral, basically. No big outflows from this market. Look at what happened with the advanced decline line. Just climbed right out of trend lower zone. I mean, don't get me wrong. This isn't great, but it's not like we've been spending all week down here. Sellers aren't doing anything that cool. And then in terms of the cumulative build on the ticks, I mean, I'll give it to you. Friday, what am I saying? Wednesday, it wasn't great, negative 2,000, but remember that for this to be noteworthy selling pressure, let me just remind you of last Friday. Let's go to, what do we want, 10 days, right? Sorry, not Friday. Tuesday, right? When the damage was done, You can see the clear difference between a sell day like Tuesday versus what we've had this week. Sellers just don't have it going on is what I'm getting at. So once again, if we just maximize our ES chart, if we take a logical approach on the hourly time frame, I want to be very clear that although I'm saying the sellers don't have it going on, and I think we've built a pretty compelling and objective, is the key word, objective case that sellers don't really have it going on, I'm not arguing that you just full port, full margin, whatever, long this thing, and that we go back to highs. I'm just saying it's very difficult to be a short in this market. It's very difficult to trade the short side and not get stopped out almost instantly on any particular flush or violation of a prior low. It's just not easy to do. So should we favor longs? Possibly, but in the midpoint of this range, I still think it's unclear. Obviously, longs still have to contend with the top of the range here. So just something to be mindful of, okay? So that's the walk through the higher time frames. I wanted to have that conversation with you guys on the stream about what's going on with the sellers here and the tension between the time frames. But now let's do what we do best, 15-minute time frame chart. We'll get nitty and gritty with the price action and see what's going on from a 3 questions perspective. So number 1, where are we opening in relationship to the prior day's range? Here's the high, here's the low. Obviously, we are opening ever so slightly above, so we've got ourselves a little gap up. As of right now, it's about 10 points. About 10 points in the ES, which is definitely tradable. You want to, of course, see a very minor pop over the overnight high for gap rules to be in play, but we'll talk about gap rules in just a moment. So for now, question number 1 is bullish. We are gapping out of the prior day's range in the upward direction. Question number 2, where are we opening in relationship to the overnight range? Here's the overnight low, which is exactly aligned with the value area high, right? Here's the overnight high. We just made it. So we're opening towards those overnight highs. Definitely more bullish than bearish. Sets up decent risk reward for a fade, right, for our gap. We'll talk about gap rules in just a second, once again. Number 3, last but certainly not least, what's the inventory position? Net long, net short. There is the prior day's settle. About half, 50-50, sometimes spent below, sometimes spent above. Obviously, more recently, we are pushing higher, so maybe there's a slight edge to the net long side, especially noting that it had been a straight rally off of these lows with no big pullback. That was here and then here, right? So I would say maybe slightly net long to the tune of, I don't know, maybe we would be pushing it here, 70% net long, right? So anyways, what do the 3 questions tell us for the morning? Number 1 is definitely that we are opening on a gap. There should be early morning trade as opposed to needing to be patient and waiting for trade to develop later in the day. So we can do something sooner rather than later. Question number 2 tells us decent risk reward for gap rules. We'll get into those in just a moment. And we're about 70% net long, telling us, okay, maybe there will be some minor correction to the overnight inventory because there is some shock and awe with the gap up. Okay? So those are the 3 questions. Let's dive into the gap rules now. Of course, let's adjust the overnight high as it continues to push. And gap rules are as follows, right? So we are opening here above the prior day's high. What we want to see, what would be ideal, is a failure of the overnight high to trade short through the opening print to close the gap, which would tag up to the prior high of day. That's how we do it. If there's just a very minor pop over the overnight high, once again, you need to make sure on this particular setup, you need to make sure that the risk reward here is worth taking, right? In this particular case, how I've drawn it, absolutely, you would take that trade, right? Or I would take that trade. It's about a 2, maybe 2.5-ish to 1 risk reward ratio if you can execute it properly based on a very minor pop off of the open. Now we're speculating here. I'm speculating with my drawing that the pop is going to be very minor. If we do something that looks like this, and then we trade back down through the opening print, there's still an argument to be made that you could take a short here, but you can't place your stop over the high of day. I mean, this risk reward is just obviously inverted. You can't do something like that. That's like it'd be 1 risk to 0.8 or something like that reward. Can't do that. All right, so that trade's not on the table. Maybe if there's an excuse for a lower high here and then a flush, right? Maybe we can get interested on something like that, and we're back to that original situation. But you need to find tighter risk if that's the case. So overall, once again, gap rules in play. Failure of the overnight high, short through the opening print as long as there is reasonable risk reward, target the prior high of day, and then look for a reversal. I say this every single time, right? You never change up your stance. You need to be consistent with how you apply the gap rules. When and if we get to the prior low of day, high of day, whatever direction the gap is, doesn't matter. Always looking for a gap fill reversal, right? Respect the prior range and then move away. You're not just blindly longing this. Let me be clear about that as well. Hopefully folks don't, and I know you guys don't do this for the most part. This is really a comment for folks who are maybe just tuning in for the first time, just hearing about the gap rules for the first time. It's not a blind long as soon as we tag up to the prior high of day. You still need everything that we need in a trade setup, right? You need some sort of indication that, hey, the market's bottoming. Could be a simple hammer candle, could be a simple double bottom, could be a simple inverted head and shoulders, right? Could be any of these things. We need some indication that the market's trying to bottom here. If you're a scalper and you're looking for the turn to happen quite quickly, maybe you're watching on a 1-minute time frame. I personally do not do that. Maybe I would watch on a 2-minute time frame. Most likely, I'm watching on a 5-minute time frame, right? So gap fill reversal here requires one of the 3 sort of things that we're just looking at, right, for reversal. It's very difficult. If it does just give you a straight, red bar closes the gap, green bar reverses the gap, very difficult to actually execute on that, right? So anyways, those are some comments about the gap rules. If we fall further back down inside of the prior day's range, what's going to be our key zone? Well, hopefully it's clear, right? It's this gray bar right here. 39.75 is really the number. 39.80, 39.75. This zone represents the bottom of the hourly balance, right? So if the market's going to pull back but remain bullish, it's going to do something like this. So if we fall into the prior day's range, boom, right here is your next key area of support, just above the overnight low, just above the value area high. That's kind of what I would think about, all right, looking for reversals off of this level. Okay, that is the deeper pullback situation for this morning session. We'll talk about single prints on the market profile in just a second. Let's quickly just point out that obviously if we break the overnight high and get acceptance above, the rotations to the top of the gap, 40-30 is your number, 40-30 up at the highs. Would I just jump in long here? I don't know. It's difficult to say after this ripper of a rally with the confusion on the hourly chart, the 4-hour trend, the daily trend, the weekly trend, the confusion that's going on there. I think for me personally to have higher conviction on longs, I would want to see on the hourly time frame a bit more of a trend reversal, right? And by that, I just mean some sort of confirmation of a higher low pullback. Because right now, this could still offer up, right? Highs, lower highs, lower highs, lower highs. This could still be like lower highs in this vicinity. And I get it. We have lows, higher lows, but it's a pre-market higher low, right? It's a pre-market higher low. As a matter of fact, let me do this. Make it as simple as possible for us. As simple as possible. If you turn off the extended hour session, which I would always remind you, right? Regular trading hour session is way more important than extended hours. So if you're ever trying to find a level, if you're ever trying to find what the zone is, do it on a regular trading hours chart, okay? So anyways, what I'm getting at is, sure, we have a low, but we don't really have a higher low on the 1-hour chart on the regular trading hours only. It's a pre-market gap up that's causing this structure shift. So I would want to have more confidence in playing the long side. The reason why I would be a little bit cautious about just longing here for the top of the range is because we don't yet have a 1-hour higher low, right? If we do something that looks like this, great. Now if we move through this equal high, we know from a trend trading perspective, you look to get involved on the higher low, you look to get involved on the equal high break. Then you retarget the top of the range. Once again, is the market going to give us the structure that way? That would be great. That would be a gift from the market if it wants to just play by the rules and give us that. But it's very unlikely that we get picture perfect setup like that. So you got to kind of be nimble and flexible intraday, right? So anyways, that's the hourly chart. That's the conundrum of the 15-minute chart. That's what we've got on a Friday session to round out a very, very interesting trading week. I'm real thrilled actually to start working on the weekly watch list video after the close today. I know we missed the Wednesday video, so I'm just, I'm fired up to bring you all the updates I've been thinking about as the week has been unfolding. All right, so that's the hourly chart. That's the 15-minute chart. I said that we were going to look at some single print stuff on the market profile, so let's do that now. Back on over here, let's have a look at our ES. All right, so we have a spike from yesterday's session. Spike rules are in play along with gap rules, which I know there's a lot of rules to follow. This is the market. This is not child's play. There are rules to follow, things we must do. So we are opening on a gap up, as we just pointed out, but spike rules are also in play because M period produced a string of single prints into the close. Now, the way we look at a spike is great. If we open in the spike, this is situation number one. If we open in the spike, we look for two-sided trade to resume, and then we'll learn something when we break the spike high or break the spike low. We are not opening in the spike. We are obviously gapping over the spike. So that brings us to situation number two. We are auctioning above the spike high here. So in theory, the market should continue to auction higher until we find sellers, right? So that's of course a little bit more bullish and contrary to what we know about gap rules. Now, gap rules tell us that the inventory should correct, and lo and behold, what do you know? Beautiful how these things interact. The gap rules tell us to look for a reversal off of the spike high. So as long as we're above the spike high, we need to be bullish on the market. The market should be auctioning higher, trying to find sellers at some level above. And it would make sense that that level might be 40.30. All right. If we move back into the spike after opening above, so if we go from a number 2 to a number 1, that's telling us that we are getting a rejection of these higher prices from the gap at least. And then the next breakdown would be underneath the spike base here at 39.85. Underneath 39.85, what do we know we have from the structural chart? Value area high, overnight low. That's your short setup for the day. Okay? So if you're looking to short this market, you can do it from the gap rules up here. If you're not comfortable trading shorts outside the prior day's range, fine. Wait until when and if, key emphasis on if we break into the prior day's range, right? Some consolidation here and then a breakdown. We know that we're looking for that pullback to the overnight low, the value area high. That's what we just saw on the structural chart. So your short would be through this range right here. It's up to you to pick off good risk reward. Where can you place your stop loss? Okay. So that's how the two rules play in conjunction. Rules to follow, rules to live by, rules to trade by. That's the ES. That's the gap rules. Those are the spike rules. We got them all. All right. Let's go ahead and move back on over the ES and we'll take a look at our poll. So let's do the poll right now. What does the chat seems to think is going to be likely for this morning's session? If you are a market bull thinking that, I'm going to say this for today's session. Bulls even would be comfortable with a gap fill and then break and then probably target 40.30. All right. So bullish situations today, a situation number 1 is looking for 40.30. We can close the gap. As long as we're outside the prior day's range, you are a number 1 for today's session. That is bullish. All right. A number 2 is still looking for the gap to close, but maybe we find a lower high, poke down into the prior day's range, and then, something like this into the close. Not really getting a whole lot of expansion, contraction, looking for a balanced type day. That would be a number 2 in the chat, please. And if you are a bear thinking that we pop it, close the gap, lower high, and then give us that breakdown that we just discussed, right? We just talked about that breakdown from the spike, right? We just talked about that breakdown on the spike. That's kind of what we're looking for here on the lower high, flush, and then the hourly high or low, whatever, in this general zone, right? So that would be a number 3. You are bearish deeper into the prior day's range, into the value area, probably looking for a retest of this consolidation here before the breakout took place, okay? That's the poll for the day. If you don't know what's going to unfold, that is I was about to say all right. That's not how the saying goes. It's A-okay. Number 4 will suffice in the chat. Incoming short squeeze. Yeah, possible. So let's start the clickable poll that people can participate in as well. So what do you think? Question mark. There we are. So 1 bull, 2 newt, 3 is the bear, and 4 is the ostrich. All right, clickable poll is out there in the world. You can participate that way if you'd prefer not to speak up in the chat. And what else is going on here? Now's just a good time as well, as we're waiting for some of those results to come in, to just point out, it's a decent time to hit the thumbs up button on the stream if you've not done so already. Simple way to support the channel and ensure that we hit some sort of growth going forward. And the closer we get to 50,000 subscribers, the closer we can be to start thinking about what that item is going to be in celebration. There's some pretty good responses to like branded mugs, possibly like a high-end Yeti mug, maybe sweatshirts. We could always fall back on t-shirts again. I know that folks in warmer climates don't always have a use for a sweatshirt, but it gets chilly every now and then. You still wear a sweatshirt in Florida every now and then. Dad hats were a good option as well, embroidered logo on there or something. So we'll see. We shall see. All right, we've given it patience enough. Let's take a look at what's going on in the chat. Who is responding to the poll here? Where's the first one? Scrolling up a bit. We've got lots of 1s and 2s flowing in early, which usually makes sense. 1s and 2s, 1s and 2s, 1s and 2s, couple of 4s. Not a clear shift to 3s as I get lower through the list. Lots of 2s and 1s for this morning session. The 3s, the Bears are definitely not coming out to play with this gap up. 1s and 2s dominate here. 45% response rate. 45% response rate. That's terrible. 45% response rate for a number one bullish situation today via the clickable poll. All right, 45, 46. All right, 50. Yes, so we should make some shorts at 50,000 subscribers. Some shorts. We'll make some shorts embroidered with a logo. Yeah, that'd be great. Anyways, that's the ES poll. Thanks for participating. Seems as though the chat is definitely bullish to neutral on today's session, which to me makes sense given the setups that we've outlined up here towards the highs. Looking for the gap to fill and get a reversal off of it, or just very mild consolidation. Looking for that 1 hour higher low if we're going to see a reversal here. Okay, it is worth pointing out if we were to go to something like let's go to a daily time frame chart. It is worth pointing out, that a daily lower high could be set here, right? If we don't make it to the top of the range and we start rolling over, all right. So if you've got, this once again speaks to the requirement of your account balance and your mental fortitude, right? If you're going to try to short this on today's session as a lower high and look for significant follow through in the downward direction to continue the trend here on the daily time frame chart, then if you do it with options, right, then you better have a long dated expiration, right? Something towards the end of the year. If you're trying to swing trade this as continuation of the daily downtrend, please, swing traders in this market environment need a really, really long time horizon. Do not take short dated options for like next Friday, looking for a breakdown and holding that through the weekend. Number one, you have headline risk through the weekend. You can see I'm getting my weekend and WR risk, weekend risk. Anyways, that's number one. And number two is that in this current market condition, right, what have we just said about shorts? We can clearly see intraday, they're not really having meaningful momentum in the downward direction. All right, so if you do it with options, have a really long dated expiration. If you're going to do it with the futures, boy, oh boy, you better have a lot of margin in your account to hold that through some drawdown. Right? If you believe that this is going to be a lower high, if you've got a stop loss kind of up here, and I don't know how many contracts you guys are trading with, but if you're trying to swing this, let's just pretend that you're using a nice round number, 10 contracts. I mean, you've got to have substantial margin to withdraw, 50 points of drawdown on 10 contracts without being a scalper and, stopping out after 3 ticks in the upward direction, right? So if you're going to try to play this way, if you're going to try to short this setup here, just make sure you've got time on your side. That's what I would leave you with. All right? Yeah, we're here hunting wabbits. Yeah, no, that's what I get when I combine words in my head and my brain's thinking way faster than my mouth can speak the words. Weekend risk is whisk, apparently. So anyways, those are my final comments for the ES. Let's go back on down to a 4-hour time frame chart, and we will do the NQ. NQ. There we are. 4-hour time frame chart, very similar to what we just discussed in the ES. Downtrend here, getting a little bit of a counter trend rally. We are back inside of this balance area here. Let's have a look at that on the hourly time frame chart. Hourly time frame chart, you can see clear as day. There's your balance. There was the acceptance, underneath last Friday. There was the breakdown. Here was the open underneath and just complete rally to close the gap, right? So ripper of a rally. In the I'll give this a little bit of credit in the pre-market, how that higher low held right off of the key support, the low of the balance. But once again, folks, if we take out the extended hours, remember that this is always much more meaningful. I would, for more confidence in a reversal, for more confidence in being like, hey, this could possibly really lead to some positive outcomes, a higher low being produced would be really, really nice on the regular trading hours chart. All right, so just something to be mindful of there. If we go on down to the 15-minute time frame chart, all the same comments. We will adjust our overnight high to its rightful position towards the top here. So yes, opening on a true gap up. Yes, opening towards the overnight high. Yes, overnight inventory is slightly skewed net long now, with, you can see the imbalance taking place on this most recent push. So gap rules are in play. The spike is not so clear in NQ. Reason being is that this, I suppose, regular trading hours, yes and no. Yes and no. If we go on over to, let's take a look at it over here. Is there a spike? Yeah, there is. Okay. So the way the half-hour increment was split up, I was just seeing a little odd there. But M period spike in the NQ as well. Your level in the NQ for the spike base is going to be 12.055. 12.055. So anyways, back on over to the price action here. Opening on a gap up, gap rules are in play. Everything's the same. Failure of the overnight high. Trade short through the opening print, closes the gap, looking for a reversal off of that level. Prior high of day is at 12.096. If we fail underneath the prior high of day, as we just pointed out, into the spike, breakdown from there, you're looking to trade the breakdown of the spike here, right? Breakdown of the spike into overnight low, value area high, just like the ES. And then failure underneath that, sure, if you want to be a short, that's probably, like for all of the folks who are saying, daily downtrend, 4-hour downtrend, right? For all the folks on that type of time frame outlook, this is your short. Failing to hold this area, we've got thin structure here, that's your short, right? Tagging up this prior high. Or prior resist. I should call it prior resistance. It's not really a high. All right. So the larger short for clarity based on structure. Based on structure for something that's clear as a short, you're looking for this to retrace. All right. So you get your lower high on the 4-hour. There's your lower high up here. And then you get confirmation underneath this area. Great. Short. All right. But until that actually happens, you're just battling this. That's the big battle on a deep pullback, right? Hourly high or low, we just saw that with the extended hours off, and then a rotation to the top of the range here, which is closer to 12.250. Okay, that's the competition. Those are the levels on the NQ, and it's just relentless here pushing into the open. So gap rules, still a primary focus, noting that your risk reward for the gap rules short, definitely powerful. If you've got a longer time frame outlook and you also want to be trading short here, gap rules would be a great way to get into a short, and then you would mitigate some, like maybe you take half the position off at the prior high of day, gap close, and then you hold half, right? You let your stop loss sit up here or wherever you're going to place it, which makes sense for your risk parameters. And then, you're waiting for, oh, great, this did end up taking this out. As a 4-hour trader, great. I got myself the lower high. I got great location, great position, right? It's all coming from the gap rules. But as short-term, like as a scalper like myself, someone who's primarily concerned with a 5-minute chart, someone who's primarily concerned with a 15-minute chart, for us, we need to be much, much more mindful of, okay, gap fill reversal, we could take longs off of this. Failure to hold here, great, we know that the short is underneath here, right, to close this, right? So it depends on your time frame, which should definitely impact your thinking and how you assess the market, okay? All right, Russell, RTY. Adjusting the overnight high, just like everything else, and 4-hour chart. Hey, Justin M. Storm, thanks for joining as a supporter. Just saw that pop up in the chat, so appreciate you tuning in. Obviously this is you're not your first time here, so thanks for joining as a supporter. Really appreciated. Anyways, Russell, 4-hour downtrend, yes, but starting to become not so clear. starting to become not so clear. Zooming in on this, let's just go to the hourly. We know that the Russell on a 4-hour, mostly in a downtrend here, but if we isolate the price action on the hourly chart, I mean, you mean to tell me that this is a downtrend? Absolutely not. Absolutely not. This is neutral at best, right? These lows did not materialize underneath the bottom of the range in both instances, here and here. We are back up at the top of the range. We are gapping up here. So once again, gap rule is in play, looking for the higher low pullback. But there's a much better chance, because the Russell is not opening in the midpoint of the range. The Russell is opening towards the top. That if we pull back and support off the midpoint, now you've got yourself an hourly higher low, and you can actually look to trade the break of the range high here and not be unreasonable going against an hourly downtrend, right? So Russell want to see a higher low pullback, respect the gap fill area, and gap fill reversal would do exactly that. All right. So we'll keep it brief on the Russell just because I know we don't have a lot of Russell traders, much more of just a risk appetite gauge. And this gap up here, the fact that it never broke down or materialized underneath the balance here does strike me as more bullish than bearish. We've made these comments in the past. All right. So that's the Russell. Let's go on over to our cash ETFs and look through the indexes briefly, and then we'll jump through the core list of companies. I mean, look at the bullish engulfer on the prior day session, right? Bullish engulfer, just zero price acceptance underneath the 200 SMA, zero gap fill reversal. Again, this was a primary objective for me yesterday. It did not happen whatsoever. As soon as we put in this consolidation here, I get it. This, of course, was driven by news, right? Whatever. Excuse me. As soon as this consolidation happened inside the prior day's range, your brain should have instantly said, okay, shorts don't have it going on. As soon as this support right here, started coming in, as soon as buyers were stepping up at these lows, no more shorts, no gap fill reversal inside the prior day's range. What did we say? Choppy, right? Now, unfortunately, I'll be the first one to admit, I certainly did not participate in the long there. No shot I was long for that move, but now we got to deal with the hand that we're dealt. So anyhow, bullish engulfer above the 50 SMA, back inside of the balance, gapping up, everything we just discussed in the ES. Your numbers here are going to be 398.75 for your gap close. Want to find a reversal off of that. Then rotate back to the top of the range, $400.75 on your SPY. If we fall into the prior day's range, once again, spike rules will be in play, but you're just looking for a higher low above 396.75. 396.75 right here, the bottom of the balance, right? 396.75. So those are your key levels. Chasing this for continuation long at the highs, once again, a little bit nerve-wracking just because we're coming into this overhead resistance, right? From a low. If we were coming into this overhead resistance off of a higher low, not a lower low, different story. But we're coming from a lower low. Buyers seemingly could get exhausted here at resistance, a known area of resistance. I would not be the first one to think about longs at $400.75. And unfortunately, right, although these moves look really great, they look fantastic, the way that you would actually execute this trade responsibly is just, this is a difficult segment of the chart to be trading. Very difficult segment, right? I'll be the first one to admit that. Very difficult chart trading over the past week and a half or so. And I'm going to dig through the archive here. I believe I actually made a comment about how the market may get volatile and tricky in this situation as we're looking for a weekly higher low. I made a comment about it. I've got to find the soundbite, and then I'm going to tag it to where we were at from a price action perspective. All right. So anyways, recognizing the environment we're in. That's the SPY. QQQ. What's going on? Yeah, my cat has been more predictable than the markets this week. That's funny because cats, of course, are psychopaths, right? All cats are psychopaths. Anyhow, QQQ, same psychology, same idea, bullish engulfer, closing back inside of the balance range here. Once again, coming from a low, so not looking to be an aggressive new long up here towards the top, simply because of the structure. Once again, if we were coming off of a daily higher low, a cleaner hourly higher low or something like that, not this pre-market junk, then fine, different story as we approach the top of the range. We're literally coming from a lower low, straight shot into resistance. Do you want to be a long here? No. The answer is no. If you long the market here and your time frame is an intraday scalper, you've just set yourself up for the worst possible trade location. if you long here and you've got a time horizon of 5 years, then, maybe you've got something going on, right? You can long this, stop here, stop underneath the weekly level, right? You've got a 5-year time horizon, probably not even concerned about a stop loss yet, right? So anyways, once again, it's so important that you recognize what your personal time frame is and what that means for your trading and your execution. An entry point that's great for a 5-year trader is not great for a 5-minute trader. And I think this is, like, if I had to get at the heart of the conflict on the YouTube comment section, if I had to get to the heart of the reason why people are so divided in the comment section, it's because our time frames do not align. You've got a fundamental thesis where you're saying markets are valued at, whatever. QQQ goes to 250, right? It has no bearing on what we do this morning at 9:30. So anyways, that's the cues. Did I go over the numbers? I don't even think I went over the numbers. Your gap closes off of the prior high of day at 294.50. Your important higher low wants to hold the base of the consolidation into the close yesterday, which is at 292.50. In a picture perfect world, you get an even higher low above 293.15. All right. IWM. What's going on with IWM? Obviously, there's your balance range. Never really got acceptance underneath it. Never closed underneath. That's an important note. Never closed underneath, even with the gap underneath. 2 back-to-back, inverted hammer, indecisive doji. Didn't close underneath. Poking through the top, like getting towards the top, poking through the top. The structural level on the daily chart, 189.75. If you're going to go intraday, on like an hour, you could probably find the more appropriate level, which is probably closer to 190. We're just opening at the highs of the range. So once again, you do not want to be a long here coming from the lows straight to the highs with no pullback, right? Looking for this, now we can start to reconsider break of the equal high. If we poke through it, again, let it go. Let it go. You don't have to chase this move out of the top of the range. What you would then next do is say pullback wants to stay above the range, right? Now I can long here. Stop goes underneath, right? So be a responsible trader. This, difficult. This, difficult. The market has not been easy the past little bit here, okay, as this pullback has unfolded. That's IWM. Let's take a look at the core list of companies. Core list of companies. What's going on with Apple? So just from a scalping perspective, right, we're going to dial back the higher time frame perspectives. We're going to bring it down to a scalper's level, intraday levels, right? I want to give you something that you can actually go based on and not just be like, oh yeah, market's tough, right? Deal with it, right? Let's try to give you some more concrete stuff to trade off of. So anyways, daily chart gapping up over the prior high of day and inside of this range here. So the excuse on Apple is that as long as we stay above 147.25, or I would even say if we give ourselves a gap fill, you're looking for a strong reversal here or here, because now we know that we have look below and fail, target the top end of the range, right? We're not gapping to the midpoint of the range. It's not like we're opening at 150. It's not like we're opening 149.50, right? We're opening close enough to the bottom of the range where there's actually decent opportunities here to try to find longs near the bottom to retarget the top of the range. This is a big look below and fail. So noting that, again, on the open, what I would be mindful of is inventory correction, gap to close. You could look to trade that short, but to me, the more compelling trade would be if the markets are going to give us a stronger reversal here, if something meaningful is going to happen back in the upward direction, I'm looking for a long around this area, looking for a long on the pullback. That way I can place a tight stop. If it breaks it, so be it. This is breaking down. If we reverse off of it, we're positioned well to target the top of the range, even just these prior highs, right? So that's what I would think about on Apple. Next up, Netflix. What's going on with Netflix? This strikes me as being more bearish. Obviously, the broad market and everything is gapping up here. We're opening inside of range and underneath this balance area. We have an inverted hammer from yesterday. So the setup in Netflix is quite simple. You have a bearish edge here. You're looking for a breakdown of your prior low of day. We are not opening close to that on the opening print, so it would be lower in the list of setups to be watching for. If Netflix gives us an intraday higher low above 315.50, we would look at this as a look below and fail. Looked below, failed back into the range. With a higher low intraday above 315.50, start looking for the top of the range again, right? Especially if the broad market's going to start rallying here. I may be being a little bit optimistic, but as an intraday scalper, this higher low strikes me as interesting. I mean, the structure on the daily chart is very clear, right? Not looking for it to go to the moon, just looking for some scalps on the long side. Tesla, partial gap close yesterday, right? So Investors Day just blew the thing up. partial move in the upward direction, opening on a gap up in the gap. So you've got double gaps to deal with. Two things can unfold here. Very, very, very simple to watch for. Close the gap below to close the gap above, close the gap above to close the gap below. That's what I would think about in Tesla. So if we rally first, looking for rejections off of the low, noting that we have overhead supply, right? So looking for rejection off of this area, 197.50. If we move lower first, looking for a very minor pullback to close the gap and then momentum to resume from the gap up, right? And then we close the overhead gap. So whatever direction we want to go first, this one's all about the gaps. Next up, Google. We've got 9:21 on the clock. Going to try to speed it up a little bit through the remainder of the core list. Big moonshot here, like everything else minus Netflix. Consolidating towards the highs. This is on like a weekly, daily time frame chart, whatever. Still an excuse here for lower highs around the 50 SMA, right? We could think about this overall pattern. Here's your head and shoulders. We're still underneath the neckline. Could be coming in for a break. Retest, position for shorts up against 94.25. So not losing sight of the daily trend here in Google, which is down, you could start looking to short these pops, right? Noting that this is kind of bear flag consolidation. We're underneath the neckline. You could get break, retest, and then continuation. So I want to be mindful of that in Google. Obviously, it would imply some upward, reach if we're going to make it to that target in the first place, 94.25. But if we don't, like if we just fizzle out of this gap and then don't do anything meaningful, failing back down into the engulfing bar could be a decent short underneath to retrace some of this thin structure here, which sets you up to take off again. Maybe you take off half. If you've got a longer time frame outlook on the market, you can hold half and look for continuation, right? So Google, really all about this level right here, 91.80. 91.80, the little consolidation lows from the afternoon session. Yesterday, we're opening above that. If we consolidate and break, fine, looking for the lower high daily. If we break down underneath, looking to short through the thin structure. Next up, Metaverse. What's going on with Meta? Rallying on the TikTok news. I think someone mentioned in the chat, right? TikTok being banned is a positive for Meta here. You're going to see a boost in Instagram. What is it? Instagram Reels. Facebook, I think, has an integration with that. YouTube Shorts, all that stuff. Anyways, massive gap up. Where are we opening? 178, basically at these highs. So do you want to be the first long at resistance? Maybe, because we have a daily high or low here. But I would honestly, just like everything else, gap rules will apply. Looking for the fade first, and if we support off of structure, great. If we find a partial gap fill reversal, so 50%, my eyeballs would briefly say it's kind of in here, 176.50. Reversals off of this, fine. Watching out for like hammer candle, double bottom, inverted head and shoulders, all that stuff, right? So Meta looking for an excuse for a pullback first for better risk-friendly entry. Don't really want to be a new money long at these upper wicks. I think the best trade for Meta would be to look at this as an inverted head and shoulders, and just, when we break that neckline and get some confirmation above, that's your better long setups, right? We're back on the long side, baby. Good to go. Like, let's rally this thing. But as of right now, you're just at equal highs. Okay? So that's Meta. NVIDIA, once again, looks into the abyss. Bullish engulfer. Opening at the highs, just like everything else. Watch your sort of consolidation lows from the afternoon. 232. Underneath 232, it's reasonable that we might move back to the bottom of the range being this area here. But we do have a look below and fail. Big bullish engulfer, closed above the prior day's high. Look for the top of the range, right? Reasons to be bullish in NVIDIA. Watching for consolidation and a break. Rallies, great. Looking to get on board if you can spot like a 2-minute really quick pullback above VWAP. Great. Ride this thing towards the top of the range. Look below, fail. Target is always here. All right, so looking for 238.25 in NVIDIA today. Downside is really going to be limited. If we pull back, once again, still looking for bullish outcomes over 229. That's been the clear as day level for quite some time now. We had consolidation underneath. The break here brings us back above. So if we're above 229, it's very difficult to have higher conviction as a short. If you're a short, you want to see this. Okay? As of right now, with the bullish engulfer and the psychology from that, doesn't strike me as a first primary outcome. Next up, Microsoft. We've got about 5 minutes till the opening bell, so if you're going to tune out, that's cool. I am just going to round out the broad market here and then tune out. But yeah, do me a favor, hit the thumbs up button on the way out if you're out of here. Wish you the best of luck as well. Have a great green trading day if you're going to tune out, and also hopefully you have a great weekend. Remember, Friday rules are in play. Anyways, Microsoft, back-to-back bars. Whenever we have same-size bars lining up like this, you always go with the one in front, obviously, right? That's the most recent psychology of the market. You can't just look at the red bar and say, oh, the market's bearish here. This is just bullish, a lower high. Absolutely not, right? The market was bearish here, yes. Now the market's bullish here. I mean, granted, it's not easy to wrap your brain around that psychologically, how we can just flip on a dime, right, with no structural change, but you've got to be bullish when you get back-to-back bars, and the most recent one is green. We're opening above both of the highs on a gap up. We're opening back inside of this balance here, which we previously rejected. So once again, the sellers, it's very hard to be a seller and have structure really line up for you this morning. So if we're above 250.75, right, we technically have a look below and fail. Target should be the top of the range. If we fail underneath 250.75, once again, I'm not saying that shorts aren't doable here. If we're above 250.75, I would not want to be short. If we're under 250.75, great. Look at the thin structure, right? Short it. Boom. Go into here. When and if we get to like 248, have a little bit of a reevaluation. Is the market continuing to look bearish? Is it starting to look bullish? So the pivot here, quite simple. The 2-day range high, 250.75. Next up, last but not least, the mini beast, Amazon. Yeah, for Paras, the app here, this brokerage, this platform is Thinkorswim by TD Ameritrade. Thinkorswim, perhaps the best technical breakdown tool in the game. I don't know of any charting package that's better. Maybe eSignal, but I personally haven't used eSignal. I know it's very expensive. I wouldn't recommend it to newer traders. I haven't used it either, but the tools in Thinkorswim are more than sufficient. Anyways, Amazon. What are we doing here? Hammer candle, daily time frame chart, lower low. Once again, think about this from a trend perspective. We just made a lower low. I'm not saying that the downtrend is over, but it's very reasonable that the daily chart is looking for a lower high, which would imply a counter trend type rally. We're opening above a hammer candle high, so we know that buyers stepped up at the lows here. We know that we closed fairly strong. We're gapping up. Reasons to believe longs are on the table in Amazon. All right, looking for longs in Amazon. In a picture-perfect world, it brings us back up to the 3 equal highs here at 94.25. And then a break of that gets interesting if the bulls are going to make something more meaningful happen. If it's going to be a just daily lower high and the downtrend resumes, you'll find rejections here. It's going to, momentum will significantly slow down, and then we'll start drifting lower once again. All right, so those are the 2 pivot points. As long as we're above 92.25, longs are on the table for higher. And if we start running into 94.50s, this general area up here, and we're slowing down, all right, you know the deal. Daily lower high in place, start looking for shorts again. Okay? That's it. Minute to go until the open. I hope everybody has a green trading day. I hope that, you don't do anything silly on a Friday. You preserve your green week. If you've got a green week, if you've got a red week, hopefully you can turn it around and make it green, but do so responsibly. Don't swing for the fences. Don't outsize a position just so you can kind of, quote unquote, what would you say? I guess swing for the fences is the only analogy I'm going to use here, but don't do anything crazy, all right? That's going to wrap it up. Thanks for tuning in. Appreciate you being here. Look out for the weekly watches video coming out at some point on the weekend. As always, join the Discord if you're not in there already. Completely free to join. Linked down below if you'd like to click on a link. It's just a redirect. There's no charge. There's no upsell. Nothing. So that's that. Hope everybody has a great day, and I will see you in the next one. Real quick, can you guys hear me? I don't know if you guys are even still here. In the chat, if you're still here. I just noticed that some guy named John Smith is saying, there's the bell by the way. John Smith says, can do a huge reversal off yesterday's low volume grind when bearish is F. Will short around 10 to 10:30. Yeah, I don't know if I'm showing up through the mic. Yeah, okay, I mean, come on, John Smith. Just arbitrarily shorting at a specific time frame, like between 10 and 10:30. Don't do that. Never do that. As a trader, never just say, oh, the clock says it's 12 o'clock, I'm going short. Please don't do that. All right? Please don't do that. So anyways, the surprise ghost voice. Yeah. Oh, man. I don't know if John Smith is still here, but yeah, please don't just short because it's 10:30. You did mention a lower high. If there's a lower high, great. I guess you can short that, but don't just short because it's 10 or 10:30. Anyways, enough ghost voice. I'm going to start watching the market, get a little bit more serious about the trading day. ES, obviously. Oops, that's the Russell. Let's take a look at the ES. ES is on its way to close the gap, obviously, right? So looking for the setup now, because the market basically just moved straight down off the open, would be gap fill reversal. Gap fill reversal, good to go. Looking for moves back in the upward direction. Hope everybody wins. Don't just short because it's 10:30. Don't just short because it's 12. Be tactful. Yeah. Anyways, all right. See you guys. Adios.